Retailers and investors alike perhaps hoping to try before they buy. Eyewear makers Warby Parker out with earnings this morning. The company continues to expand its retail presence in hopes of capitalizing on consumer spending. Did come out with a forecast for the full year that was a little below some analyst estimates. Joining us now to talk more about all of this, Neil Blumenthal, Warby Parker co-founder and co-CEO, and Dave Gilboa, Warby Parker co-founder and co-CEO as well. And Yahoo Finance's Brian Sozzi is joining us here too. Guys, thank you so much for being here. Just first of all, I wanted to get kind of the big picture view as to what you are seeing here. You know, glasses are sort of an interesting item because they are and are not a discretionary item, right? You can buy multiple pairs, but you need at least one in order to see if you are a glasses wearer. So what are you seeing right now? What is it telling you about consumer spending trends?
Well, we're super excited about this category because just the need is so great. By 2050, 50% of the world's population will need glasses. So there is massive need for glasses, for eye exams, for contacts, and we're sort of best positioned to continue to grow within this category. As we look at last year, we grew over 10%, but according to the Vision Council, the category was pretty flat and only grew 0.5%. So even though this category is going to grow for the long run, we do think that we're still in this uncertain moment and people can delay eye exams, can delay glasses, but in general want to save money. And that's why coming to us and, you know, spending $95 on a pair of glasses instead of $400 or $500 makes a lot of sense.
Dave, what needs to happen for that consumer to start buying more aggressively in your stores? Do you have to drop the price point, or you just sit back, wait and see, and the economy, and hopefully the economy turns the corner a bit?
Yeah, so we believe that we offer tremendous value, just like we always have. So our single vision prescription glasses cost $95, the same that they did when we launched back in 2010. Since then, we've expanded our assortment of products and services to include eye exams, contact lenses, progressive lenses, a much broader assortment of options for customers. And we are seeing that people are shopping with us. As Neil mentioned, our growth continues to outpace the category. We are still in a period of abnormal consumer behavior where we saw massive growth in the category in 2021 and then less activity in the category last year. We did see some promising trends around FSA spending towards the end of 2022 that give some indication that there's more predictable, steady behavior returning to the category. But Vision Council is projecting that 2023 is going to be another year of tepid growth in the category. And so we're guiding and proceeding cautiously.
Operating stores is difficult. It usually compresses a lot of margins out there, especially given the disruption that you were able to come into the industry with in that digital first type of touch point with consumers. And so as you continue to open up new stores and march towards that target that we were just sharing with some of our viewers, how do you ensure that you are still maintaining the margins for the business as a whole?
Yeah, it really comes down to discipline, and that's identifying great stores, having an amazing team here. It's focused on real estate, store design, and construction, building stores so that way we can pay them back within a 20-month period, which we continue to be able to do. And when you look at our different cohorts of stores, whether they opened in 2013 or opened in 2021, we continue to have best-in-class payback periods and best-in-class target four-wall margins at 35%. So we feel very confident in our retail expansion, and we find that that's the number one thing that customers want to see from us. When we survey customers, potential customers, why aren't they shopping with Warby Parker yet? They know it's incredible value. They want to have stores near them, given how important convenience is. So we continue to hire and retain great talent, whether it's it's retail advisors, opticians, or optometrists. And we're seeing that. We're seeing that in our average revenue per customer that continues to increase. We're seeing it in our new business categories like contacts and eye exams, with as categories both grew over 80% last year. And a lot of that's due to our store expansion.
I'm glad that you mentioned hiring a lot of great retail workers, opticians, et cetera, because I'm curious how hard it is to do that, right? And you talked about holding the line on the pricing of your glasses, but I'm guessing you might have to be paying some of these folks more. So what does that pressure look like in terms of wages, and whether you've had to raise wages and whether you expect to continue to raise them throughout the year?
Yeah, so we always ensure that we're paying competitive wages for our team. We want to attract the best and the brightest, and we find that we're able to attract and retain some of the most talented people in our category because they want to work for a brand that stands for something, for a mission-driven organization, and we are operating in a competitive job market, just like we always have, but we haven't seen meaningful changes to our ability to attract and retain team members over the course of the last year.
Neil, should investors be thinking?
We do see.
Neil, go ahead.
I was going to mention the one thing that we do see, and we're constantly visiting our stores across the country, is that other retailers, right, have job wanted, help wanted signs in their doors. So the labor market is still tight. The strength of our employer brand enables us to recruit and retain great talent. So we're not experiencing those labor shortages, but it is something for us all to be thinking about from a macro standpoint. And if I had a message to any viewers, call your congressman and let's get Congress to push forward some immigration reform, because we are net negative sort of legal immigration that we need, both high school skilled and low skilled across the country, across categories.
Neil, just going off on a different topic, should investors view you partly as an AI play? That is a buzzword, but I think back to when you launched trying on glasses virtually. What is the evolution of that?
Yeah, we've always leveraged technology. We view ourselves as a tech-enabled lifestyle brand. So we sell a health product that is a fashion accessory. So it's important to have a brand component here, but we've always leveraged technology. 6 months ago, the buzzword was Web3. Now it's AI. We always like to invest in practical technology that's going to make our customers happier and come back and shop with us. So we were the first to launch a true to scale virtual try-on that you're seeing right here. It was first available on our iOS app. We've now launched it on browser to just make it easier for customers to shop with us. We have a virtual vision test that folks can do a vision test remotely and get a prescription for glasses or contacts. So you're going to continue to see us leverage best-in-class technology to make better customer experiences.
A lot of this and the net promoters that are your customers that will tell other people about the strength of the product or the experience, it comes back to the materials that you're able to get for these glasses as well, and even for the contact lens that you're able to produce. How have you been able to kind of navigate any supply chain issues or get the necessary amount of materials to really keep up with some of the demand you're seeing?
Yeah, so we are vertically integrated. We operate 2 of our own production facilities where we cut lenses, insert them into frames, and then ship those glasses directly out to customers. And so the majority of the glasses that we're producing are produced in-house at our facilities in Sloatsburg, New York, and Las Vegas. And that enables us to have faster turnaround times, ensure that quality standards meet our high expectations and our customers' high expectations. And then we work directly to create custom acetates, use the highest quality titanium and other input ingredients into our glasses, and Same goes for contacts, where we offer our own brand of contact lenses, Scout, which is a great lens and offers great value. But we also, for our customers who have other brands of contacts that they have been wearing and want to continue to wear, whether that's from AccuView or Alcon or any other manufacturer, we also offer that entire broad assortment. And ensure that our prices on those products are really competitive within the market.
Certainly. That contact lens revenue business that you were discussing increasing from 4.3% in 2021 to 7.2%. Excellent stuff there, as well as on, of course, the eyeglasses that at least 75% of us on camera right now have. Neil Blumenthal, Warby Parker, Sozzi just has strong vision. Neil Blumenthal, Warby Parker co-founder and co-CEO, and Dave Gilboa, Warby Parker co-founder and co-CEO, and Yahoo Finance's Brian Sozzi. Thanks so much.